Hey everyone, it's Imran from Options Insight, your macro options spotlight. Okay, markets kind of trading higher as China bullishness kind of continues for now, as the dollar remains better offered. Chinese stocks kind of managing to hold in there, despite, like I said, health officials pushing back on the idea that they're dropping their COVID zero policy, but the market seems to have got a sniff for a reopening trade and they're going after it right now. US midterms, obviously, today. There also seems to be a bit of optimism in the air, and people saying that if the Republicans get a sweep, then actually that's quite bullish for the market. And the kind of logic there being that it means less fiscal. If it means less fiscal, then it means the economy is gonna struggle, and therefore the rate picture is gonna turn sooner rather than later, right? So that's kind of the logic people are using. Commodities taking a breather after the huge ramp up that they had last week, obviously, and Treasuries still a bit heavy with the CPI due on Thursday, and TLT just still really struggling to find any kind of bid, down 1% there, and down 3% on the week. Okay, if we look at vols, a bit of a mixed bag in vols. We did see a decent vol reset lower in the front end in China. It was down nearly 7 points on the day as the market kind of stabilizing. Oil also resetting down by 2 vols. We did see a bid to copper volatility. Obviously, that started moving around a lot more recently. Someone got wind that I was short gamma on copper miners and decided to make it start moving again. And then outside of that, just a bit of a bid coming back to some of these FX vols. Nothing crazy, but just ahead of CPI being a catalyst, the fact that these things are moving around like crazy, we can see a lot of negative carry there, showing that the FX gamma continues to be quite good value. And we're also seeing even bond volatility, which is carrying badly, finding a little bit of support as well ahead of CPI. If we look at skew, we do see skew still at the lows in Europe. Skew also softening in China as some demand comes in for upside relative to downside on this whole reopening story. Outside of that, no real massive moves in skew except for HYG, which was down nearly a vol point in the 25 delta 1 month, which is pretty punchy, taking that to about 2 vols and seeing on a 20th percentile. So that's starting to soften quite a lot as well, kind of following suit from what we've seen in equity skew, HYG doing the same sort of thing. And I suppose if you look at the price action HYG, when it has been selling off, it's been quite orderly. It hasn't really been accelerating to the downside. And maybe that's what we're seeing reflected in the skew curve right now. Okay, that's the summary for today. All right, if we have a look at what else I'm looking at. I found this one pretty interesting. So China restocking on oil. So obviously the whole China reopening story is what's got markets excited in the last sort of few days. And commodities and Chinese stocks have been flying the most. And they're kind of signaling that there might be something to these rumors. Okay, often markets move before the actual news. So often news flow follows markets, not the other way around. Health officials obviously push back, and cases of COVID are actually back on the rise as we approach winter. Now, the interesting data point that Goldman's research are pointing out, and that's where these charts are from, is that China has quietly been ramping up their oil imports. So if we look at the numbers for oil imports, they've been rising over the last month. And that's this dark blue line rising. That's what that red dotted arrow kind of represents there. In fact, let me circle it just so you can see it clearly. That's this thing here. So we're saying that if a reopening wasn't on the cards, would they be buying ferociously and bringing oil, shipping oil in? Okay, and the fact that they're doing it now, just ahead of the midterms, is an interesting timing thing, because we know that it's quite likely after midterms that you might get a bit of a pivot in terms of SPR policy and what these guys need to do to replenish, what the US needs to do to replenish theirs. So is it a case of China is basically front running? They know there's a buyer coming back to oil. They've got a reopening coming early next year and they need to get some oil or restock their inventories. You look at their inventories, they're relatively low as well. So the fact that you are seeing that in terms of their oil imports is giving you a little signal that whilst they might not be talking the game in terms of dropping COVID zero, under the hood, there is something going on. But regardless whether it's true or not, I mean, it does seem like crude is going to have plenty of buyers going into 2023. So it's pretty supportive for oil prices in general. And we do remain bullish on that. And obviously we're expressing that through the trades that we've got on in our options overlay portfolio. All right. What else? So now if I have a look at sterling. So, I've been going on about FX being the best gamma in town, or one of the best gammas in town for a while, right? So I thought we'd bring up our volatility dashboard on the pound, so you can have a proper look at what I'm seeing. And so we've obviously had a bounce off the lows in terms of cable. Now it's settling in at around 115. We've got skew repricing lower, so still slightly elevated skew, but repricing lower from those crazy highs down up at 4 vols, back down to like 2 vols for puts still. Implied volatility had a big old spike to 25, came all the way back to where it is now, which is around 13. So whilst on a longer term time frame, if we go back, whereas it used to average more like 8 and it's now at 13, it still looks elevated compared to where it was. It's come down a hell of a long way. And more importantly, if we look at how it's moving, this thing's realizing. So realize is closer to 20, which means volatility carry is negative and is currently sitting in the 1.8 percentile if we go back over the last year and a half. So right now we're in paying territory for the carry indicator, which is saying options are paying for themselves in terms of carry, right? They are realizing the theta that you bleed on an option, you're making it back if you're trading that gamma on a daily basis, right? That's what we're seeing right now. And you can see over the last month that big shift down in the volatility surface in terms of the term structure. So now the strategy compass, which is supposed to kind of guide us and tell us where we want to be going in terms of trades, is saying sell calls, because spot has bounced and vol is still elevated on a 1-year time horizon. Okay, I'm saying I would not sell these. I would not touch that trade with a barge pole. Okay, now selling calls from a directional perspective maybe does make a bit of sense if you're bearish. Okay, because we have had a bit of a bounce here. And if you don't think we're going to pop back above 120 because of the issues the UK economy has, then maybe it does turn south again. But from a volatility perspective, the trade that I think is quite interesting here is the opposite. The other thing we're looking at in today's note is cross-asset volatility falling. In general, since the middle of October, we've seen the move lower. The general G7 FX volatility is lower, VIX lower, credit spreads lower. It's all kind of coming down. So the question is this now what we're going to see into the end of the year? Have we seen the peak in vol for 2022? Or, given the fact that Powell was hawkish in the last meeting, we've got CPI data to come, we've got more jobs data, we've got 2 CPI prints actually before the next FOMC. Midterms are happening. We don't know what the kind of outcome is going to be after that. Personally, I think they're smashing volatility a little bit prematurely. I think 2022 has still potentially got a few surprises left for us. And I would exercise caution rather than rushing out and getting on the bandwagon that we're going to sell vol. I think we've had a bit of an artificial move lower in vol because markets have lifted higher on the back of this China optimism. I think it's premature, and I would not be surprised to see a bounce coming in some of these volatility metrics in the not too distant future. All right, sorry about that warning, but that's kind of what I'm thinking right now. I hope you find it useful. Don't forget to like and subscribe to our channel, and I will catch you guys tomorrow.